Morning, morning, everybody. Hope everybody is well. It's Thursday, the 30th of July. Now, we're obviously, let's address the statement yesterday. Quite a good kind of, statement, well, structured. He is aggressive, but one thing he likes to do is keep his cards very, very close to his chest. He likes to keep his cards close to his chest, old Kevin Walsh. Well, one of the things that obviously he'd said is that he's adamant that inflation base rate is 2%. He's not going to drop interest rates until that 2% is hit. And he also said he is not afraid to act. So I think an increase in interest rate for the next term is now at 62%. So it's pretty high, especially obviously all the data that we know that we've got coming. All right, so they are not in any shape or form being pressurized by Trump to reduce interest rates. So let's wait and see what happens here. So, in regards to obviously what's happening today, all right, we've got some GDP data coming out at 10, and then we've got an interest rate decision for the UK. Now, UK's, slightly different, all right? They've got nine voting members, all right? So, everyone is pretty sure that they're obviously going to keep interest rates as they are. If you look at it, they're pretty much in line with the US. But obviously, it's how many vote in what kind of scenario. So we're expecting to have a seven unchanged to obviously increase. If this number changes, all right. So if, for example, we had nine, all nine, unchanged, all right, that's going to that's going to you know increase confidence in the pound, because everyone's going to be like, right, you know what, they're on the same page. Everyone's confident, everyone's aligned. All right. Now, if this number changes, so if, say, for example, we have four, or sorry, six unchanged, and then three hike, or five unchanged, four hike, then that's not great for the pound, because it means that they're completely out of agreement. Typical Brits. This is obviously how we do things. Why we can't just let one person make the decisions, I don't know. We obviously have to have this democracy where it has to be spread out. But obviously, there's good things and bad things about it. So, yeah. And then later on in the afternoon, we've got core PCE. We've got some GDP, jobless claims. So it's a pretty active day today. Um, let's do a bit of a roundup here. All right, let's do a bit of a roundup here in regards to obviously what's happening. Starting with gold here. Yeah, right. Now, what we've got here in regards to gold is we have got high, or oil and yields, screaming higher. Yeah, right. Mainly, yields, screaming higher, um, gives us it's kind of upper side cap. Yeah, it means that you know um, with 10-year yields as high as they are. Remember, it hasn't been this high. I mean, we're above. there. So we've got to zoom out since January, we're pretty high. So with obviously yields at this height, that's going to cap how high gold can go. But obviously the war escalation is obviously going to also cap how much lower it can go. Now the US hit Iran pretty hard yesterday. Yeah, probably the hardest they've hit. There's still oil trickling through the Strait of Hormuz. But obviously, it's slower. Hence why oil jumped up last night. And it's back at that 835. But it's not having those crazy kind of moves that we saw early on in the war. But obviously, it's yeah, if you look at yesterday, we've recovered from 80 to 85. Today, we're kind of creeping up higher, So, I mean, everyone wants this war to end, but it's not looking like it's happening, at the moment. So let's look at stocks. Stocks have died off too, which is mainly to do obviously with this escalation, plus obviously the interest rate potential hike. Because naturally for a company to expand, it either has to take on funding or it has to borrow it. Now, if it's more expensive to borrow it, they're going to start to kind of tighten their straps. High inflation, higher oil prices, kind of limits expansion. All right. And then, usually, I know obviously it's the war that's caused this, but obviously, too much expansion, which is what happens. And obviously, that's why this world goes around in an 8 year, cycle. When everyone expands, spend, it obviously creates higher inflation. So obviously they have to raise interest rates again. So we're in a really tricky time at the moment. Hence why we'd started off, war was cooling, we were chilling, we'd smashed it. And then this week, currently down, but obviously we've got uh, 2 more days to trade to try and obviously get this back. It's weeks like this going to happen. So 100% reduce risk because it's a tricky week because we've had a bit of kind of stop start. There was war was de-escalated, now it's escalated even harder. So it's on full high red alert. I don't think anything's going to change until the weekend, so we've got to act with obviously that in mind. We've got to be cautious. And yeah, that is how we've got to got to kind of approach today. I think today and tomorrow is going to be taking what we can, and making sure that we are yeah, not obviously not caught out. So yeah, right. Let's have a look at where potentially dollar could end up. So dollar, kind of breaching this 101. I actually think we're going to breach this, but obviously it's very, very tricky to kind of judge, what is going to happen. We've got, yields higher, we've got oil higher, but we do have, stocks are up. So it's a really, really tricky kind of day to you could with obviously relative risk, you could pick either or. All right, but I'm gonna pick. I genuinely think that Donna's gonna drive a bit higher. I think we're gonna drive into this area here. Um, so that would be like 101, 100 area. That's where I think we could potentially drive into. So that's my expectation for today. Stocks, let's just have a look at these. Yes, they're up for today, but they're kind of dying off here. So we've got to wait and see. Oil, yeah, this is gonna hold high, if not push a bit higher. It wouldn't surprise me if everything continues, if we're back trading anywhere within this kind of region where market closed, last week. And I think if we do end up here, it just goes to show how tricky, markets are up, because we'll have had a week of it doing this. All right. So it's extra tricky here. And obviously we need to have that expectation. Um, so let's now have a look at the pairs we potentially can trade. Should have held this yesterday, because it smashed into TP. I'm expecting probably Aussie to drop. However, what we're going to do is we're going to note obviously previous dailies, so previous daily high and previous daily low here. All right, so this one here. Um, and then we're going to note the Asian high and the Asian low here. So that is these two here. Currently we've tapped into Asian, low, um, and um, um, and we're going to yeah, see obviously what happens here. All right, so I don't want to kind of rush into anything today, so I'm gonna pitch the Asian high. All right. Again, keeping everything small. I don't want anything crazy. Probably go for 15 pip overall, range here. That's what I'm kind of looking at. Oh, I always do that. There we go. Um, and then I'll be looking for price to then die potentially down into this Asian low. How many is that? Let's go for this here. So let's then go for two. What will be that? That'll be 15 pip total stop. I think we can go for probably a 45 pip TP. Let's not push it too hard. So that's what I'm expecting um, today. So let me line everything up and then we can post this one. One, two, three, four, five. There we go. So let's just put these ones in because it's easier. These are obviously our three triggers. This is our highest one here. Remember, I'm really erring on the side of caution here because I don't want to overdo it. I'd rather though we got the trade right, but we were obviously a little bit high than us. Us. Not so right here. AUD sell trade idea. Okay, brilliant. Um, right, that is number one. Just make sure I did post that right. Yeah. Okay, number two, I'm going to stay away from pound because pound again triggered our top entry and then flew, but obviously again it's sometimes it's safer to stay out. I'm going to stay away from pound just because we've got obviously this interest rate decision, and I don't want to get caught. Euro, right? Let's now analyze euro here. So we've breached the previous daily high. I'm expecting euro to have a little bit of a tumble um, today. So that's that one there, and then 8 hour. Again, we're pretty close. That's quite a nice tight option there, so I quite like that. So again, what I'm going to have here is I'm going to have our first entry at Asian high. I'm then going to have exactly the same 15 pip range, but obviously rates starting at the Asian high, and then we're going to have there we go, right, and then we're going to have the same thing here. So we're going to have, let's do 45 pip TP and 15 pip. Have I done that the wrong way around? Yes, I have. There we go. And 150. There we go. Right. So I'm pretty happy with that. Pretty much lines up with yesterday too. Asia's been pretty small, in regards to obviously what potentially could happen. So we could be due a nice big pullback here. I'm actually really comfortable with where that TP is too. I'm just going to move that a little bit tighter. There we go. Right. One, two, three, four, five. Right. That's our stop. And we've got entry one. Sorry, entry three. We got entry two. And we've got entry one here. And then we'll have a look at our where we're going to put our TP1 here in a minute. Hmm. Quite like the top of these ones here. So that's obviously how I'm going to lay out Euro USD. So let me just put that in as well. USD sell trade idea. There we go. Right, cool. Perfect. USD JPY. This was obviously our trade from yesterday. I'm just going to get rid of this, and rather than me having to do all of these again, I'm going to leave these in. Oh no, let's just clear it and I'll just do it again. Right, so the daily wise, we obviously got our daily high, which I think is going to be the overall target with yields, screaming higher. We know that obviously yen will get hurt. Um, that's obviously one thing that we've got to look out for. So Asia again, we're just going to target this Asian high here. All right. So, remember here as well, we've already, made up our the directional bias. So I'm going to keep everything nice and tight. So, do that. 15 pips. There we go. And we're going to go obviously long here. What is this up here? That is 40. I'm going to go 45. I'm just going to push it above. I'm going to have a slightly bigger stop because we have to with yen. I don't particularly like this, but it is what it is. Might be tempted to drop this a little bit lower. Let's drop us down a bit. So we're a little bit safer here. Ooh, yeah, yeah, that's much nicer. Right. Okay, one, two, three, 4, 5. Right. TP overall. And we've got our TP1 needs to be here. So mark this one in red because that's our stop. And then we've got entry three, entry two, and entry one here. So that is our three entries here. Yeah. All right. The stops here. Very happy with that one. But obviously, I'd rather err on the side of caution. USD JPY buy trade. Yeah, there we go. Right. Let's have a look at gold just because. So let's just delete everything. Let's have a look at gold here. So let's have a look on a daily. Was just crazy. If we look here, it doesn't have to be nuts because when we go down, otherwise the arrow is miles away. 8 hours. So Asia was pretty small. Asia was pretty small. So let's wait and see what happens here. So we've got Asian high. And then we've got our Asian low here. Now, like I explained earlier with gold, we're kind of stuck between a rock and a hard place here. I'm not going to trade this morning, but you want to be trading gold around these areas. All right, here's one. And then you want to be trading it around this area too. All right, because anything else, yes, you can have some luck on a lower time frame, but it can, it's not sure which way it wants to go. It's not going to have long term in investment, right? And it's not going to have, massive short term investment either. If we look at obviously how Asia acted, yes, New York, huge impulse, equaled these highs, reduced back down. Asia popped up again, but obviously rejected right the way down here to this previous, London kind of close. I actually think that this is going to be quite a dominant area. If you wanted to, you can add an additional in the middle, but these are the areas that I'll be trading roughly within gold today. So avoid these areas in between, but obviously make sure you're trading it off of, off of proper areas. Yeah. All right, as opposed to trying to trade it here, trying to trade it here, trying to trade it here. That's obviously what I would be aware of. That's how I would set up gold. So for 100, for one, say 16, for 1 6, sorry, for 0 and 6 9, for 30, and then 3 9 9 6. So that's how I would be trading it. Um, right, let's have a look at some of these questions. Jonathan, can I buy gold? It looks good. Just remember what drives gold and remember what's happening. So gold, even yesterday's candle, it's not clean. We've got a big wick at the top, a big wick at the bottom. We've traded within the previous days, volume. So yeah. Yes, you might look at it on a 5 minute, see this candle and think, yeah, buy, buy, buy. But then this happens here, and chances are I'm going to tail all the way back down. So it's trickier to trade today. So 100% reduce your exposure. Um, Matt, Dan, when it comes to looking at these trades and coming into our areas, is there a momentum indicator that gives us more confidence that it's slowing or turning? Not really, because it can happen, and so quick. The only thing that I would say, I just want to get rid of these blue lines here. The only thing I would say is, so I'm just going to get rid of all these lines because I quite like to leave these on so we can speak about it a bit later on. Um, the only thing that I would say throughout the day, you want to be concentrating on, what are, yields doing, what's the dollar doing, and what's, for example, oil, doing. So, it looks like because while we've been on this call, dollars popped up nicely. It's broken through 101 on 15 minute, broken through on 30 hourly. We still got another 10 minutes. I'm expecting a recovery, obviously, into this area. So just constantly be looking at it now. For example, from Jonathan's question, I'd like to buy gold. It looks great. Just take a quick look at, what are yields doing here? Are they still trading at all-time highs? Is the dollar still trending higher? Is oil still trending higher? If the answer is yes, then you don't want to be buying gold. That's not to say that I'm 100% right. I'm just like I mentioned about trading. It's just about increasing your probability. So that is one thing that we can do as traders. So right, I hope everyone has a great Thursday. Let's smash it. Remember to reduce risk. Slightly. And yeah, let's absolutely smash it. Have a good one, team. Have a good one.